Welcome back. This is part 4 of our discussion of professional ethics for accountants. In part 4, we're going to address question number 35 at the end of chapter 3 in your textbook. Now, question 35 deals with a single company and several things might happen within that company. So let's have a quick read here. The firm of McGraw & West CPAs has 2 offices, one in Phoenix and one in San Diego. The firm has audited the Cameron Corporation out of its Phoenix office for the past 5 years. For each of the following independent cases which occurred during the year under audit, indicate whether the independence of either the CPA involved or the firm would be impaired. Okay. Mary McGraw, a partner in the San Diego office, fell wildly in love with Bill Smith, the treasurer for Cameron Corporation. Okay. Wildly in love. They were married in Las Vegas. During the week, they were so wildly in love they couldn't wait for book the church. They went to Las Vegas. During the week, McGraw still lives in San Diego and works in that office, while Bill Smith lives in Phoenix, working for Cameron. On weekends, they commute to their home in Yuma. Mary does not participate in the engagement. Okay. So we're going to comment on the CPA involved. This is Mary. And she is a partner in the San Diego office. The Phoenix office, however, does the audit. And so Mary's not a covered member, and the firm would not be impaired. Mary, of course, her independence is impaired. She could never work on that audit or even be in the office, since she's a partner, be in the office, work in the office of that does that audit, okay, the Phoenix office. That brings up the whole issue. You know, we talk about marriage, spouses being equivalent, and if you do it or your spouse does this, it's the same. And so whatever you could do that would impair your independence. If your wife did the same thing, or your husband did the same thing, that would impair your independence. But in the world today, we have lots of arrangements where people are as emotionally attached, it seems, as husband and wife. And we sometimes call this spousal equivalence. I don't know if you can have a spousal equivalent, but it seems to me there are moments in a relationship that would make you as impaired as a marriage would. And so these are rules you have to follow. But remember, there are situations that lie outside the rules that would impair your independence just as much. Okay, so just thinking of that. Part B. Jim West is the father of Will West, a Phoenix partner. Jim West has a material investment in Cameron. Will West is not aware of his father's investment, but does participate in the engagement. Ooh. So we have a close relative with a direct financial interest in a client we're auditing. Is the auditor or the firm impaired? Yeah, you'd like to think so, but you can't be impaired if you don't know. Okay, so since the CPA doesn't know of his father's investment, he can't be impaired. However, if he becomes aware, okay, then he shouldn't participate in engagement anymore, because he has a close relative, and that does impair him. Okay, good. C. Bill Johnson, a senior in the San Diego office, has a material investment in the capital stock of Cameron. He does not participate in the engagement. So since he has a direct investment, he is impaired. However, he's not working on the audit. And so the firm's independence is not impaired, unless he owns more than 5%. Remember that 5% rule? So if together they own more than people in the office own more than 5%, then that might impair the office. D. Sandra Steverson, a staff assistant in the Phoenix office, works on the Cameron audit. Her uncle works as the chief accounting officer for Cameron. Okay, what do you think? Is uncle a close relative? Uncle is not. And so Steverson is not, Steverson's independence is not impaired. And the firm's independence is not impaired. However, we have to go back again and think about what the reasonable person would consider to be impaired. And so it depends on the relationship with the uncle. What if the uncle raised her? See? What if the uncle raised her and he's a functional equivalent of a parent? So independence could be impaired. Technically not. Okay? Technically not. But possibly, in fact, yes, depending on the relationship she actually has, the personal relationship she might have with the uncle. Okay? So keep that in mind. Then E, Bill Adams, a senior in the Phoenix office, does not work on the Cameron audit. He owns 9% of Cameron's outstanding equity. Okay. So Adams is obviously impaired, right, because he has a direct financial relationship. And Section B of Interpretation 101-1 indicates that all members of the CPA firm can own less than 5% of a client's outstanding stock. So not only is Bill Adams' independence impaired, but the company would be declared would be considered not independent as well. Okay, all we tried to do here with the discussions we've done for Chapter 3 is take the things you've read and try to apply them in a few cases. Now your job will be to go to 3 more cases, like we did in 35, 3 more cases, and give your opinion about how things should proceed, independence or not, whether you keep the client or not, those kind of things, and then discuss that with the other students in the class. Okay? So you have your charge. Let's see how you do.